Hello and good morning, Simpler fam. Today is Tuesday, August the 11th. I hope y'all are having a good day of trading. Um, Sideways to down price action so far today. How are y'all doing in your trading if you're around? Um, it's 12:30 Eastern Time, 11:30 Central. Um, the day I have hit my daily goal. And so yeah, I'm just kind of hanging out here watching the market and trading the zones as trades are setting up. I'm not trying to push my will on the market. That's where we get in trouble as traders, I believe. Can y'all hear me? Is anyone here? I mean, am I early? So, yeah, it's 12:30. Hello. Thanks, Max. Thanks, Janet. Appreciate it. Yeah. I assume we're supposed to be in here as we are every Friday. So, if we're not, then Mirza or Lorna can let me know that today we're not supposed to be in here. All right, let's take a look at the overall market, the S&P 500, using the weekly chart. Using the futures chart, I like to start with a top-down approach, get an idea of what the trend of the market is. This gives me my bias. And it's bullish on the weekly chart. We finally broke out above the chop and we closed up near highs last week. And so far, yesterday and today, it's just been a little bit of a pullback here. So that being said, the weekly chart still bullish bias for me. I have an alert set right at the previous all-time highs in the event we were to get a pullback of another 100 points. I'm looking to be a dip buyer right there. The smaller time frame chart supports that. That's this alert right here. And then you have the bull channel on the daily chart as well as a very nice 4-hour demand zone. Good morning, 007. Good to see you. I'm not sure. I assume he's coming, but I'm not sure. I can't say for certain. But I assume he is. Yes. Um, anyway, hey mama, good to see you, Janet. Yes, we will practice some zones. You got it. All right. Anyway, on the daily chart, the bull channel and this 4-hour demand zone, you see the alert there. On the weekly chart, my buy zone aligns up with this daily chart. And of course, let me show you that nice big imbalance candle on the 4-hour chart. Loving this zone right here, 2630 to 2584. Now, we pulled back on Thursday, but we didn't pull back far enough. We pulled back actually last week, Wednesday and Thursday, but we didn't pull back far enough to get me a swing trade entry. And we still haven't pulled back far enough. We're very, very choppy, my friends. When you're in choppy conditions, I believe the smartest thing you can do is not try to impose your will on the market, but just trade the levels as they are coming to you and take your quick profits at targets and then get out of the way. Right? That's what I've done today. That's what we've done in the SPX room. Look at this 2-hour chart. Look at that's a pretty big imbalance candle there to the downside after opening up towards the highs of the pre-market and towards the highs of yesterday. This is where we opened, but down she went. So yeah, I think that given a proper pullback down near 77.40. This is actually a 4-hour zone on SPX. I'll show you real quick here why this is a buy zone for me. On the intraday chart, you have inside candlestick structure, price action paused here. Then the following day, we opened up, right? And yeah, so this is a buy zone and it is a place I've already played the initial bounce out of here. These orange circles. Hey, John. Hello.
What's up, sister? How are you?
Hey, good to see you.
Hey, good to see you. Sorry, I was talking and I was like, oh shit, 4 minutes. I was like, I'm late. So I came over here and started listening to
Oh,
you. It's funny. Leslie in the
oh.
room was like, but Mel is on time. I was like, yep, that's why we make a good team.
Sorry.
So, no, no,
I
no.
was like,
Keep
007
on.
asked about you, and I
Yeah.
was like, I'm sure he's coming, but
Yeah. Hey, guys. What's up? Sorry. I'm in the background. Keep on doing your thing.
all
Just let me,
right.
yeah.
So I was just going over some intraday stuff and talking about not imposing our will on the market. That's when I lose the most amount of money. And so I was just showing my trades this morning. We got a pullback to the line in the sand on SPX. That gave me my first trade that really just started the day off for me. So I went long based on the line in the sand. We called this out live together. And actually, Trendy John posted in the chat about the line in the sand trade. I took my profits up here at the daily edge, mid, and upper weekly edge. So started the day off just like that. Then we got another pullback here into that buy zone. And we got the confirmation process on the 3-minute chart. And this next orange circle is where I took another trade to the upside. So I was buying the dip in the intraday buy zone and I exited up here pretty quickly. But I was in this trade a little bit longer than the other. And then we did nothing but sit here and chop. And I wasn't interested in getting involved here. Some days I'll play the chop, other days I just don't want to. I was in good profits here and I waited for a nice looking setup. When I noticed that the ES could not get above its 618 and actually close above there, that gave me a clue that, hey, bulls were not controlling this level of 77.62. So that's when I started looking for a short position. So we got a turn signal. We got sorry, not a turn signal, but a confirmation trade right up here where you see this orange circle. This is a new indicator. It uses trendy zones and my confirmation process. It prints out these labels. That way we know where our entry, where our stop, where our targets are if you want to use the indicators targets. But you see the red arrow here, that is the indicator firing off for a short entry. And I took this thing all the way down to the lower daily edge. At this point, I am in, made my goal for the day and profits are locked, and I'm not going to give up more than what I'm over and above my profits on a day like today. So I did take another long entry here. You can see the green arrow, that is the precision indicator triggering a buy order. And this was about a 1-for-1 risk to reward. I took the trade and I exited back here at the time the Fibonacci was the 23.6, but it was a daily edge as well, and very close to that 15-minute ATMA. So I exited there and just got a little bit more profits. It only paid about $150 a contract on SPX, not a lot. But now I'm not in a trade, but you can see the indicator is triggering a shotgun long entry right here. So that entry is 7741.8. You can see that price is below that level right now, but your stop is down here at at 7738.10. So if you took a trade from where price is right now, since it has triggered the entry, right, you would have a risk of a couple of points. Now, I would use the low of the day right here. I'm trading this buy zone that I've already talked about on the higher time frame chart, and I would go long here and use the Fibonacci and candlestick structure 7743.62 as my first target. Then, of course, you have the resistance of the 15-minute 8 EMA and the upper daily edge. Now, I got to point it out. This is the shotgun method of this indicator, meaning this thing can print long or short anywhere on the chart. It's not using the zone method. It's just a shotgun as we do have the confirmation process. It prints regardless of where price is at. So you see that it just printed a confirmation short. Well, where price is at, right at a buy zone, it's just not a place that I would take a short. So you got to use a little bit of your own process in combination with this indicator. So if I put on the both shotgun method and the zone method on the indicator, and I use, let's say, zones based on a 2-hour chart, which is what I like to use for um, intraday charts. It's going to give me actual zones. And you see the pink zone printed out over here. This is a buy zone. So if we get a confirmation to the upside inside of this buy zone, that's a trade for me. But I don't just take the shotgun entries unless it makes sense for the process. And the process for me, where price is right now, is to look to go long. So, yeah, that's what SPX is doing right now. Those are the trades that we traded both live in the SPX room this morning for some good profits, and then just some little trades that I've done on my own here in the afternoon. What you been doing, John? How's your trading going today?
Hey Mel, it's good. It's good. I took the line in the sand, so I did a set and forget trade this morning that I wanted to show just for examples of how to use the levels. Took a 3 point stop on it, and then I took the line in the sand, but I took the line in the sand with a 1 minute confirmation. So she was showing you guys, I think on her charter, 3 minute confirmation.
Hmm.
Um, I took the 1 minute because I was looking for it to hit that, and then I wanted to see we got it, and I think we got like 10 to 15 points out of it, fully. And
Talking
then
about this one here.
yeah, yeah, it
Yeah.
was beautiful, and
Yeah,
you
I took
guys could
that
see
one
it
too.
ripped. Yeah, I
Yep.
took that,
Yep.
and I took the Nasdaq at the same time, and so and then I came in this morning. I used the indicator uh, last night. I was up all through the hours because I had some personal stuff that happened, but I decided to take a trade and I came in already hitting my reward, but I wanted to show some examples of, taking the trade, which I want to show you guys real quick. I'm going to come over and share my screen real fast and just kind of talk through this as well with you guys because we're really excited. Mel and I are super excited to bring this to everybody. For one, her strategy of confirming in zones or at levels has become very popular. And now, like she explained to you, it's right here on the screen. What I love about it, we had one of our members say this morning, is that it really brings a lot of confidence to their trading. I've I've had this indicator, been building it for months now. I don't know how long it's been, right,
6
Mel?
months, my birthday.
6 months, and it seems simple, but it's actually it's not as simple as you would think. So it's more about, and I've had help, but it's like placement of things. It's how do we come up with the targets, um, and it and we're going to expand on it more during the webinar. But not only is it fun for scalping or for people who are trading with prop firms, but it's also amazing for swing trading. One of my
Mhm.
better trades in the last several weeks, I used the 2 hour, and I came across the 2 hour. It had a confirmation trade on it. It was ES futures. Is a little bit higher risk, obviously, with the higher the time frames. But I loved it, and I didn't want to sit in front of the charts all day, so I just took that trade, and it paid off really nicely. But been using this, and Mel's been. Here's the thing: the indicator hasn't been around forever, Mel, but Mel's been using this process for over a year now.
2
Um,
years
yeah,
actually,
yeah.
John.
So yeah,
It's well, September, I'm sorry,
yeah,
will be
yeah.
2 years.
Yeah. So, I mean, it's kind of like the PMZ. It's like, well, does the PMZ trades work? I mean, I've been using it for 10 years. Mel's been using it for a long time as well. And yeah, it works. You got to be disciplined. But what I really love about it is that it gives you, you guys are watching my charts right now, it tells you, and to me, that is where the confidence comes from, Mel. Like, I wish that somebody could have said, hey, this is where we want you in. This is what stop is going to be. This is what the target's going to be. And with that kind of precision, now I can have the confidence to know that, hey, wait a minute. If I take this trade, this is how much money I could lose. And if I hit my rewards, I can also make this amount of money. So it's just really, really nice to have. But as Mel said, the shotgun method, very important to understand. We're using levels. So we're identifying levels together with our rooms here. We're telling you where we want to get long and short, but we're waiting for the confirmation. So we identify, then we confirm, and then we execute. So it's really nice to do it that way. All right.
And important, John, just so I point out, John was talking about trading futures with it. It works great for futures. I was given examples on SPX, and it works great on SPX.
Yes. Yes.
But if you don't like to trade futures or you don't like to trade SPX and you're more of a SPY trader, guess what? It works there too.
Yep.
That's
Yep.
really cool. Most recently, I can just show you an
Mm-hmm.
example on SPY, which was beautiful using a zone trade, John. The zone trade was right here in this yellow zone. This is could be a buy zone or a sell zone.
Mm-hmm.
And on SPY, I use a 3 minute. John typically uses a 1 minute. It's a, you do you, boo.
Yeah.
You
Yeah.
can use a 1 minute, you can use a 30 second, you can use a 5 minute. You know how you like to trade. For
Mm-hmm.
me, on the 3 minute SPY, let's say I don't like trade futures or SPX and I'm an SPY trader, it printed a sell signal right here. This is a zone and a shotgun trade. It is both. I really like those.
Mm-hmm.
And boom, 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 boom. Here's your first target. It gives you that first target. That buy zone is your first target. You trim here, you move your stop to break even. Look, you wouldn't be stopped out. You would still be in this trade. You would have taken from this indicator about $2.50 to the downside on SPY here. It works on Apple, it works on Meta, it works on all of them, and it gives you both upside and downside entries. So a lot of times, well, as traders, we like to be a little biased, right, John?
Yeah. Yeah. I
Yeah,
mean, it happens.
and a lot of indicators just give the upside trades, right?
Hmm.
They
Hmm.
don't give the downside trades. And this one gives both. So I like that as
Oh
well
yeah.
about the indicator.
Yeah, for sure. And when we hold, we're not sure how we're going to at this very moment, so I can't give it exact details, but Mel and I will have our webinar in September. September 23rd is the first one. There'll be most likely an early bird special on this indicator. It is by far, I said this morning, Mel. I'm sure you were busy in the SPX room, but I truly mean this. Mel's confirmation process is awesome. And I have not touched my indicators or built new indicators in a decade. And that's how it's going to be 20 years from now. I'm going to say the same thing. But this is the first, because I don't need to. Honestly, I just don't
Hmm.
need the indicators work very well. But this one is the newest indicator made and I love it. And I know that everybody else loves it because people are watching it on our screens and using it. And I just really, really love it. And if it wasn't for Mel's confirmation process and me sitting here counting candles, then I probably would have never thought about, hey, let's create this indicator. Because I was just at a point where I was like, I was trying to watch it and I was like, wait a minute, couldn't this be easier? So we just made it easier. And I always said that indicators are a convenience. That's all. They're a convenience, and this is super convenient, super convenient. And Mel had said, "Hey, I wait for the levels." She takes them every once in a while, because sometimes I can't control myself. I will take a trade on this indicator if the risk is really small because I'm like, okay, well, maybe my level's not perfect, but I am seeing something here and the risk is really small. I'll take it, but that is not the disciplined approach. Okay. Just being straightforward. Once this thing rolls out, I think our plan is probably to have some live sessions where we break out, go somewhere else into a different room, and really go through this with you because, as she said, this is for all charts and it's not just for scalping, although it's really fun. I make my money in the first 30 to 90 minutes, but I can also use this for long-term trades. And Mel, in our last class, we talked about looking for this confirmation on higher time frames. Well, now we can just kind of go through them and you'll see them set up. And I'm actually in the process of building the scanner for it.
Awesome.
So the scanner is going to be awesome too because now we can just look at our watch list, Mel, and then go, oh, okay, cool. Apple has a 4 hour confirmation signal,
Mm-hmm.
and then you can
No,
go over
that's
there
really cool.
and go, okay, this is sweet.
Mm-hmm.
I like the risk. I'm going to take the trade. So
So
yeah,
on this on my chart, I just wanted to show an example of, let's say, Freeport, you wanted to be a buyer, right? But you were waiting for price to come into a buy zone. Now, for those of you that watched my Saturday video on YouTube, it's not at my buy zone right now, but I drew this 4 hour inside and up right here that price has come into. What we do once price comes into this zone, then we go down to those smaller time frames and you wait for that confirmation. So that's how we will use, or that's how the indicator is beneficial in timing your entries for swing trades. So you can see I'm on a 30-minute chart, which on a 4 hour zone, I like to use a 30-minute chart. But you see how the indicator has not given me confirmation to go long here. That's important. I'm not going to catch a falling knife, or I'm going to do my very best to up my probabilities of not catching a falling knife. And that is the entire reason why I had to develop a confirmation process a couple of years ago in my trading. Is I was finding myself getting into entries way too early and catching falling knives, and I was sick and tired of giving up profits doing that again and again and again. And so hence confirmation process.
100%. Yeah. And she means that. And I think, Mel, it's funny, you're not the only person, over many, many years since I've started. That's always been the thing is like not every zone, and I've heard you say this before, not every zone is a buy zone and not every zone is a sell zone.
Well,
And
every zone can
right,
be a zone, but it's not
yeah,
necessarily an entry.
right, exactly. And this confirmation really helps. One thing that I did, I just threw it up since we had somebody in here. Mary said, "Hey, it's also on TradingView." Yep, it's built for TradingView. TradingView's super clean. I just like the colors and like how it looks on here. But this is an example of what that looks like on an SPX chart right now. So in this example, on a what chart am I on? I'm on a 1 minute, but on a 1 minute, the stop tells you what the risk is. So 1.5, which is really small. And then the targets here, which is really nice as well. But typically we're on a 3 minute. The only time I go to a 1 minute, I'll talk about that when we do our breakout session, is when we have high implied volatility. This morning it was really low, but I was
Oh
just
my
being,
gosh, yesterday
I,
too, dude.
yeah, I think I was just being really impatient, and I was like, "Yeah, I just want to get in a trade," so I went to a 1 minute. So,
No,
um,
you know what
yeah,
happened? You're like, "Oh, hoo, hoo, I'm up all this money. Let's
yeah,
go." And you were
right,
super excited. That
yeah,
happens to all of us. I don't,
yep,
well, I can't say all of us, but I know I fall victim to that. Like, when you're doing really, really good,
yeah,
like you're so excited, you
right,
know? It
yeah,
happens.
yeah,
It
for
happens.
sure. I want to answer Rick's question real quick. I'm looking to put on a trade for MBIS earnings tonight. Did you buy the Iron Condor you talked about in the BMA? So what I did was I just have a straight up call. I'm risking like $500. Rick, out a couple weeks on a trade, but I do need to find a put debit spread. Um, the put debit spread most likely is going to be the numbers
At
that I
the
talked about.
demand zone?
Yeah, into a demand zone. So most likely, if it's cheap enough, if it's cheap enough, I'll throw that on. Um, I mean, right now we're trading at 190, so I would see it bouncing between 170 and 165. You know, sorry, give me 1 second. 161. Yeah, so 170 to 165, 165 to 160 would be the extreme. So I don't know how much this thing moves on a norm. Like I haven't been trading it all year long, like a lot of people have, but I think it moves a lot. And I have a supply zone all the way up towards 250. So I think with a good earnings report, we could see 250. With a bad one, if they're just trying to teach some people some lessons, I think we come back to
2
165 by 160. So
Dude, John,
yeah,
you wanna
yeah.
know what the weekly ATR is on this
What is it?
$190 stock? $40.
Holy crap.
You think it
Yeah.
moves? That's a
Yeah.
pretty high ATR on a
Yeah.
$190 stock. So,
Yeah, that
yes,
is
it
a high
moves.
ATR. Um, in saying that, did they burn premium? It's hard to tell, guys. I think it's easy to look at this, and probably a lot of people would say they're probably going to burn premium. I'm sure the implied vol is up high. Um, I don't I don't want to speculate on that. I prefer what Rick is talking about. I did a video, I think it was during my BMA, and I talked about the trade idea on this. I prefer to buy debit spreads. So I buy debit spreads and make an iron condor out of it. I prefer not to sell iron condors into names that move a lot because a lot of times we'll see more than one ATR average, and I just don't want to be on the wrong side. I rather lose the small debit that I pay versus it going against me. So
Yeah, for sure.
yeah,
Yeah, I think you can more than likely will get a, sizable move. What's
I
the
I
market
hope so.
makers, anticipating? Let's see. Oh, okay, 17 points. Do they report today?
They do. Sorry, tomorrow morning. So before the market open.
Hmm, okay. Got it. Got it. Yeah, so I guess they're figuring about 20, somewhere around, would put it at 170 to 210 from where it's at right now. So we just keep bleeding here, John.
Are we? Oh, yeah, let me
Yeah,
get this thing out of the
yeah,
way.
we just
Thanks.
ES is actually, I don't know if you have the level of 7751 on your chart for support, but I have a 618 there from measuring a recent rally up to the most recent high, which I think was on Friday or Monday on ES. Then it's pulling back and it's very close to 7751. And you got the round number psychological value there as well.
Yeah.
Same time, I've got a area of support on Nasdaq at 29,606, and Nasdaq's very close to that. And then if I look at my Dow chart, I have support at 53,976. So they're all right at areas of support right now. But dude, looking at the Squeeze Ultra, we're in an
Mm-hmm.
ideal squeeze on the 5 minutes to the downside.
Yikes. No.
Ideal squeeze on NASDAQ and the Dow, downside. I don't know if you updated your indicator, but
Mm-hmm.
it now prints a downside arrow, ideal squeezes, dude. And that's what we got on the 5 minute charts, NASDAQ and the Dow.
Wow. Okay.
FYI, for those of you that are long. So for me, SPX, I've traded the buy zone. I had a set and forget this morning. I don't know if you were here when I was talking about that, but I had a set and forget. And boy, I took my profits and put in a break even stop, and it was stopped out. And so now I'm waiting for some confirmation signals in this zone.
Yeah. That was fast. I saw it. But that's the way to trade this kind of market to the upside. I mean, honestly, it's been fading this afternoon, and that's what I was talking
Well,
about. It's a choppy market. So I was telling everybody when we're in a trending market, we're used to making X amount of points or dollars. When we get in this kind of market where in the morning, I'm only talking about the morning session where it started getting super choppy, it's so much better to just take 25, 30, 40% of what you're used to taking. So like for my trades to the upside, 10 points, that was like max. I wasn't looking for 20, 30, 40 points to the upside today, you know. So,
oh yeah, and chop, I will. I still trade the levels. I don't set my targets based on points, but I find during chop that my first target's typically 5 points, somewhere
mm,
right around four or
okay.
5 points.
Yeah, which is really
So,
all you need to make a good living.
yeah, well, you
Yeah.
can. I mean, I was two trades in. Definitely, well, two trades put me almost in my $500 a day goal, but that third, the short from the upper weekly edge down to the lower daily edge definitely put me over there.
What else you
So
guys got? Anything?
yeah, that's what I was gonna say. Where was it? Janet has been practicing drawing zones. Wants to look at Etsy from a top-down approach, helping to draw zones.
I could do that for sure. Let me throw on a chart here. See what I can find.
Oh,
Here's some SNDK. That looks awesome, by the way. I had a zone and look at the move out of there and that trendy edge, that monthly edge there. But let's see. What was the
Etsy,
Etsy? Wow. Okay. Are they
taking it
still in
back,
business? No, I'm just kidding. I hear
taking it
people,
back.
yeah, I hear a lot of people talk about Etsy still. I'm like, oh man, forgot about those guys. All right, let's do a quick one. I'm gonna clear this. Obviously, I have not. Look at this, Mel. Look at this chart. This looks crazy. I haven't looked at this name in years, I think, but let's just go ahead and do that.
Oh,
Okay. Look at that. We had a high way back in the day. Okay, just like that. And I'm going to use some fibs. That's the first thing I'm going to do is I want to figure out where is price currently in relationship to the all-time high. And we're in what we call a bear channel. Okay, cool. Now let's open it up, take a bigger look, or not a bigger look, just a more defined look, if you will.
Or recent.
Yeah, more recent. And we have inside and up formation here, inside and up formation here. We have the trendy edge. Look at this, Mel. Beautiful. This is where we look to buy leaps. You can see that that worked to the tick and moved up towards the top. That would have been your target. Pulled back to the mid. That worked as a get long as well. Then as prices move up, we look for price to come back and test to confirm. And you can see everything looks great. If I were going to do anything here, I would simply use these two levels. I'm going to come down just a tad. We have a monthly edge, a yearly edge, and I'm going up underneath this candle over here. 75, I'm just going to round up. 75 by 70 is support. Far as the monthly edges are concerned, this is resistance until proven otherwise. Okay. I would be a neutral. That's how I would look at this. I'm not going to do anything unless it can break above here. If you're a cloud trader, this is definitely a place where you could look to scale in. I would prefer to wait though for price to move back down into this area. Okay. And then far as like where it could continue to go if prices break over 86, then we need to look up into the left. See this huge impulse down? This would be where I would be targeting only if price can hold this area in here. So this is more of a swing trade for me. I'm a buyer here. Okay. Looking for price to move up, rejection, and then finally make it up to here. It's not going to be an easy run though. Big picture, it's completely in a bear channel. Even though it's had a nice run, from 45 all the way to 90, it's still in a bear channel. It hits supply over here. This is the reason why you're seeing it stop. If this, then that. If prices get back above here, this could be a breakout type trade. Looking for that. If prices come down to here, this is where I'd be scaling in for a long-term trade. And if for some reason 70 didn't hold, I would have areas to get long or add to my position at 67. Me personally, I'm buying at least for a small name like this, I'm buying at least 3 months to 6 months for this target up here. That's just me. Okay. And that's my analysis. And they have earnings coming in on November the 4th. All right. You buy so much stuff on Etsy. Okay. You're welcome, Janet.
Ant-Man is reminding you about DRAM. DRAM.
Dram. Let's take a look. Jaram. Just kidding. Uh,
Dude, that was bad.
Duran. It's like a dad joke. Uh,
Yes, yeah.
yeah. This is an inside and up right here that's forming on a weekly. All right. So right there. So this is your over under basically 50 and a half. If it's above there, is still creating it. What I would do, because the market is at sort of a sit still right now, is I would look at every stock that I'm looking at. Reminds me of that. That is
Dude,
going to be choppy.
that's
What's
a
up?
pullback to demand, man.
Oh yeah. I see.
That's the yeah.
Look, I mean this big so consolidation led by just fill in this gap by a big impulse up,
That's
right?
beautiful. Like
Yeah,
actually that I would draw that demand zone. I've never traded this name, but John, I'd draw that demand zone out all the way to the bottom of that candle down there.
down here.
Yeah,
Yeah.
wouldn't you? And
Yeah, for
say,
sure.
hey, as long as price, I like the inside and up, you're getting a confirmation right there,
Mhm.
right? On a
Yeah.
weekly chart. But yeah, no, I like that all the way up.
Yeah, if you really like this trade setup, I mean, it's a good time to scale in if you like the setup, you know?
Yeah, but let's point out that this is a weekly chart, so that's definitely more longer type trade. It's not a
Hmm.
trade that you just plan on being in and out of in a couple of days.
Right. That's right.
Did you draw fibs on that, John?
I have not. Yep. Let's
Just
get it
just
all up here.
curious.
Yeah, let's go up to here. That's what it looks like there. It stopped at the 23.6, which you have a little inside and down there, Mel.
I see that.
Right. So, and we already
Mhm.
tested it. And we're in a demand zone. So that tells me when we are close in proximity to this area and we're in a demand zone, you got to buy time. Like, don't
Mhm.
expect anything right away. But I would be targeting up towards this 38.2, around 58. And then, as
Mhm.
Mel would tell you, her favorite area is the 50 and 618. Same thing. I love this area. If I'm buying time, I'm looking for this first to trim out of, and this is my final target. And I love the confluence, the confluence of the inside and down at the 5618. So my thought is you make money up here as long as this holds, and then you get, take your position off, pull up stops, or reverse that bad boy and look for a short back down to here. Okay. And man, if you're like in a leap on this position, then we're just going to increase, your basically your targets. I would still say with a leap position, 60 to 70 would be my target. And then from there, I would reassess. And leap technically 1 year out. So look at them, see if they make sense to you. And if you're talking about leaps the way that we teach, I'm not going to stop out of a leap unless the quarterly candle closes under where you would place your stop. So, for example, as Mel stated, if this is the bottom of the zone, I would have to see a quarterly candle, not a daily candle, not a weekly, a quarterly close under this. Then I would take my close or my stop in. Okay.
Michael would like to look at Dell and CLS, John.
I'll do Dell, and then Mel, you can do the other one, CLS. So Dell is down 16 bucks. Yeah, but it's a $400 stock. Okay. Wow, beautiful chart. I mean, seriously, I could tell once I fix this up a little bit here. Let's go down to, let's just do the rally right there. Still extremely bullish here. It's actually testing the 23.6. Let's just take the whole move into play, but is extremely bullish. Jeez. I mean, where do you start this? You could start this thing way down here. You could start it right here. Yeah, I don't care how you look at it. It's extremely bullish. You guys know that. 440. This is a place where I'd try to take the trade just based off of fibs. Far as zones are concerned, this is a little bit harder. There's a lot of consolidation in here. And yeah, a lot of consolidation in here. I would have to break this down and get to a smaller time frame to find my entry. I already know it's bullish, right? Now I'm looking for the same things that we look for, but I'm looking at a smaller time frame, looking for some confluence, on these fibs. We go to a 4 hour. Come on. There we go. All right, you can see that this wick, if you guys have taken our supply and demand class, you can see that it's come into this demand zone. That was a great place to buy it. Um, Love this imbalance candle here. This is pretty far down. I I like the fib. I like the fib here. I like the fact that it's tested the zone. But we have so much confluence here, Mel. Like, look at that. This one's hard for me. If I was just trading a couple days out, I'd be looking to take a trade from here. But we're under a lot of resistance in this area.
Did you
I,
show the daily on that real quick?
yeah, let's look at it. Before I go to the daily though, I just really I keep coming back to this imbalance candle, this
Uh-huh.
trendy edge, this
Uh-huh.
50. And if I were to take all of these and combine them, I have an area down here I would rather buy at 400. Just me. But let's go into that daily and see what we got there.
That's what I thought. Okay. Yeah.
This area here, or what you looking
So
at?
we're testing, right? We're coming back into what has just been chop. We got a little breakout there. It looks
Mm-hmm.
like last week,
Yep.
first week of or last week of July, and we
Mm-hmm.
got that breakout. I would actually, John, run fibs of that breakout move rather than where you have your fibs, just to see if we don't have a nice Fibonacci level right about there that would be worth trading. And it's, yeah, okay, that's what
About
yeah.
right there.
Yeah. And then on the 4 hour, if I'm not mistaken, isn't that where you had some demand down near like 410
Yep. Right here.
ish, 420 ish? Yeah.
Yeah, right there.
Okay. Yeah.
Yeah, and it's tested one, two, three times.
Yep.
So I mean, you know, that's demand where people continue to want to buy their products. So everybody's willing to buy Dell here, and it is evident through these wicks that are coming through here.
Yeah, I think I would
So,
trade that right there,
mm-hmm,
John, from 429 to 410. Use that 618 right there. That
mm-hmm,
would be a lower low after that pivot or flush low right there on that candle
yep,
a couple Fridays ago.
yep,
That's a zone I think I would trade right
yeah,
there because below 410, then it's almost a, well, it's an 85% probability you're going to come back to that imbalance
yeah,
down towards 360.
yeah, exactly.
And I bet, is there, I can't see it, but there's a lower monthly edge down there.
I mean, it's pretty far down.
Where's that lower ME at? I can't see it
Oh, you can't. It's
on your chart.
basically right.
Oh, I see it now.
Yeah, right,
Yeah, I just
right
gotta
down
get
there.
close. See there you got some imbalance candle right there, John. See it?
Yeah. Oh yeah. I
Yeah,
mean,
yeah.
and you have a really nice demand zone
Mm-hmm.
right
Right
there.
there. Yeah, because of
Yeah.
that imbalance. So I would, if I wanted to go long Dell, I think I would use that zone. And hey, I got a 20-point risk there, and my reward, it looks like, is greater than that 20 points. So
Mhm.
I'd set that and then, yeah, because a retest of this area that it chopped in for so long
Mhm.
could be a good buy right there.
Yeah. Let me see one more thing. Let me go to a higher time frame. I see the quarterly is super bullish, obviously. Let me look at the monthly real fast. It's about time for me to turn off my Thinkorswim. It's been
I was going to
today.
say it's yours is really slow.
Yeah, it is acting super slow. Um, I mean, this is the monthly. This is a powerful breakout that's holding bullish channels, and as we just showed you on the 4 hour, it seems to really like that level. So let's see how it performs. I mean, be disciplined here. You know, if this then that. maybe if it can get over some resistance, could be a fun breakout trade. Maybe you guys get a squeeze. But I prefer for it to pull back into that 429 by 410 level before
Yeah,
doing
it's in a
anything.
daily and 4 hour squeeze, both of them bullish squeezes.
Mm-hmm.
So, that's of course going to be all of our bias is that the squeeze would fire
Mm-hmm.
to the direction of the trend. All right, you want me to do CLS now?
Yes, yeah, yeah,
All
it is.
right,
I told everybody earlier I have to roll out at 12:30. I have somewhere to go. But that's probably pretty much all I'm gonna do. I got to take care of something.
got a lunch
Um,
date, dude.
yeah,
What you
yeah,
doing?
got a lunch date with one of our members. I'm gonna go,
Awesome.
yeah, go do that, and then
I
um,
was making a joke, but that's
no, no,
funny.
yeah, lunch date,
Got it.
yeah, get to hang out with one of our members. Did you get your simpler hat yet, Mel?
No,
Okay, you should be getting one
did
in the
you?
mail. Yeah, I just got mine yesterday. So
Well,
it's
my
like a
mail's
little.
kind of we have issues when stuff comes from Simpler to my house for some
Oh,
reason.
really? That's weird.
Yeah,
Huh.
but
Okay.
you know how Bruce
Well,
sends us coffee? Sometimes mine gets
yeah.
lost.
Uh-oh. Uh-huh. It's the mailman. He likes his coffee,
Right? And he likes Simpler
right?
trading hats.
Yeah, I guess.
Susie Q, I am Tampa area, just north of Tampa, and John is in the Panhandle. So looks like you're near Miami, Palm Springs, maybe, or not Palm Springs, Fort Lauderdale, Jupiter. Okay, there you go. Very cool. You're about 4 hours from me. All right. Let's see here. CLS. This is actually a chart that I had up. Probably someone requested it before, but this is some demand that it looks like in March price came back to when we were when the market was going down. And I like the move out of there. I can tell just by looking and knowing how Fibonacci's would look that right here was a pullback to the bull channel, and then we broke out and made new all-time highs. And now this pullback here, we are threatening the 618, and we might be below it actually. Yes, we are. So, with that being said, just from a Fibonacci standpoint, and looking at the histogram on the squeeze indicator, you if you're looking to be a buyer, price could be coming back to test this demand zone and this 887 here at or around, it looks like 270. So if I am looking to go long anywhere before 270, I need to be aware of that fact. Now, from a moving average standpoint, I need to point out also that price has been chopping inside of the EMA cloud here for 1, 2, 3, 4, 5, 6, 7, 8 weeks. And you can see price keeps closing right in or just, I mean, barely outside, but basically inside of a very narrowing cloud. So bulls need to keep price above 306. And bears want to get price below there. Then, as far as a bullish breakout from this EMA cloud, would be price getting up and above basically 330. If price can get up and above 330, then I would look for price to bounce and run some secondary fibs here. And I would look for price to bounce up into my favorite Fibonacci zone and one that I use quite a bit for targets and entries. And that would be 378 to 401. From a smaller time frame, because I'm not real sure how long you're looking to trade this, Michael. But let's look at the daily chart. It gets a little sloppy. First thing I'm going to point out is as far as moving averages, you are below all of the important ones. You're below the 50, the 21, the 200. That is bearish. According to the moving averages. If I look here at the squeeze ultra, you have bearish ideal squeezes is the most recent signals on the squeeze ultra. You're in a squeeze currently on the daily chart, low compression. The histogram is moving from top down, which is more bearish than bullish. All of these moving averages are an issue. For that reason, Michael, if I was looking to go long, it would have to be as a leap type trade longer term. If you're looking for a place to potentially go short, then I like a rally up into the top of this choppy area before we sold off here on the 6th of August. From a Fibonacci standpoint, for a bearish trade, right? This is the upper end of that chop. It's a Fibonacci reason to be short, and it is supply on the daily. All of these candles are inside, and then we break down. So I've got reason here from a Fibonacci and candlestick structure, um, that this is where I'd look to be a seller. So whether you're wanting to be bullish or bearish, you need to know where you want to be a buyer and seller, because those give you your entries and targets. As far as demand goes, or the bottom end of the recent chop is right here. Okay. And price is inside of there, Michael. But again, if I was looking for a long side, which you are, um, I would respect this zone. And as long as price holds here at 282, then I'm looking for upside targets of 327, 355, and ultimately 378 to 413. Now, you mentioned the August 2027, so like a year out, Michael. Okay. Whew. I was hoping you weren't talking about the August monthlies, because I was going to try to nicely, politically correctly say that I don't see price moving that there. But since you mentioned a whole year out, right? Then definitely I could see price if bulls step in and we hold. Ooh, that's pretty monthly demand, Michael. I'm a buyer of this name for a long-term trade like you just described. If price pulls back to 289, I believe it's yeah, right here, 288.92. I'm just going to call it 289. Yeah, this is a monthly demand zone, and not all zones are created equal. And one of the telltale signs that we look for strength of a zone is the size of the candle out, the move out. And you see how this candle is much larger than the other candles, the body of this candle. That is a sign of a more powerful zone. So here it was tested. And look, at some point over from July until recently. Look, we moved from 288 to almost 388, almost $100. So this demand zone was powerful. It pushed price in a month $100. All right, so it's already been tested. And why did it fall here? Well, very simply because you have inside and down candlestick structure. See this big, huge topping wick right here? That's your yellow flag warning when you're bullish and you create a big old topping wick like that, that there is selling pressure in this area. So from the monthly chart, since you're talking about a 12-month trade, I want to be a buyer at 289 to 230, and I want to be a seller at 385 to 374. And if you want areas to trim in between, since you're looking to be a buyer, let's talk about where I would trim it. I like to use the 38.2. So it's going to be right about 350, it looks like. Yeah, right about 350. And that's how I would play CLS right there. All right. You're welcome. Let me see. We got about 30 more minutes. So any chart requests, go ahead and put them in the chat now. And absolutely love charting. So I'd be happy to do that. AJ, looking for IBM for a September call. Yes, you got it. I love charting. Absolutely love it. September call, not as important for me to look at a monthly chart, but September is basically about a month away. Look at the weekly chart here on IBM. You got demand, and we have come back. We have tested. We've gotten powerful moves off of it. We came back. We tested it again. And now, believe it or not, IBM has closed up 1, 2, 3, and we're up again this week. Now you got immediate resistance here. The EMA cloud is in the way, and then the 38.2. And obviously, my favorite zone, a target up here. And that is about $30 or so. So we could make that target in about a week since the weekly ATR is $27. So for a trade that you plan on to be in at least a month, I still like this weekly supply zone. And I want you to notice the power of that candle down. This is, even though it's not a fresh zone, right? Price has already been here and fallen from here before. But that size of this candle would cause me to definitely respect this supply zone. Not that I don't respect supply zones ever, but even more so. Okay, so that's on the weekly time frame, and since it's a September trade for you, I will look at the daily as well. Now, I haven't charted it in a while. It's pretty cool that weekly chart is still in play. But it looks like recently we created a low for the year over the last 52 weeks. Uh, and we're bouncing from there. That is a demand there. You have inside and up candlestick structure. Price has gotten above a falling off of a cliff daily 21. Price is inside of the cloud, which we expect chop in here. You're getting white candles. Those are neutral candles. This daily 50 is a problem. And of course, the daily 200. You got a gap to be filled right up here. And then the most recent high. If we just take, I can tell, well, I'm going to measure this from this high to this low. Yeah. If price gets above a golden Fibonacci level, that's not my range to that I mark. Okay. Rather, I do this range from this high to this low. All right. And we are right at, look at the wick, almost perfect touch of the top of the bear channel. Over under level right there on IBM. This is over under. Okay. If bulls can push price above 240, 208, then I would be targeting 255, 270, and 290. If, though, bears keep price below 242.08, then I would look for a pullback back to this imbalance area that's going to line up with the daily 21. And if I draw some Fibonacci's on here, it's crazy when you draw Fibonacci's all the time, you can kind of see these things before they play out. This area right in here, okay, on a pullback to here, if I am looking to be long, it's going to be from this zone. I have candlestick structure and Fibonacci and moving average. To me, that is ideal setup right there. Okay. That would be my buy zone. These would be my targets. That is if you're looking for the exhaustion pullback buy. If you're looking for the breakout trade, that's going to be above 242, and these are the targets. Okay. All right. Let me see here. Got IBM. Got that one. HEI for earnings on 8/28. A little early to put on an earnings play. They don't report for another few weeks. Now you could play a run up into earnings, right? But let's look at where price is at on HEI. We are up near all-time highs, it looks like. As far as the Fibonacci range, it's definitely a bullish trend. Therefore, my bias is to the upside, and it's very bullish right now. So the bull channel here is the Fibonacci zone to trade. But I would like to see some smaller time frame candlestick structure there as well. I'm going to go ahead and mark the 50 and the 618 here just in case. Okay. Now I'm going to go down to the smaller time frame on this name, and I'm going to look at price action. So I do have an inside and up. It has been tested. This is demand, and it is Fibonacci. As far as moving averages, a daily 21 is sitting here at about 354. So a pullback might not, it's already happened once. It might not come all the way back to the daily 50 and this demand zone and Fibonacci zone since it's already came back once. But if it does, that's where I would be a dip buyer. And then, of course, with that being said, if price is down here, that means it's left this area, right? And so if I'm looking for targets, I'm going to hypothetically say that price has came down here because I would be in a trade, prices come down there, and you see this consolidation area. That means that price would have fallen from the bottom of the chop. Okay, so that's going to have to be my first target there. All the way from there to the supply inside and down right here. So first target 362, then 369 by 377 right there. And that would be how I personally would play HEI. All right. Hymns. Oh, wow. I'll tell you what, I haven't looked at hymns in forever. I probably still have drawings on this thing. Yeah, sure do. But it's been a while. Wow. Okay. All right. Let's go ahead and remove the drawings. Boom. Like that. A weekly chart. I'm going to mark this recent swing high. Wow, what a ledge of resistance here, without a doubt. Big old resistance area right here on the weekly. And then price just broke down. Look at this imbalance candle. I love candles of unusual size. If HIMS comes back into this area here from the low to that breakout imbalance right there, this is where I'd want to be a buyer on the weekly chart for HIMS. All right. Most recently, you can see here you have supply. It was kind of just a very methodical, calculated move to the downside. So nothing of huge imbalance, and we have come up and tested it, but it would be a place that if I were going long, I would want to trim on the way back up to target. Now let's look at the daily time frame and just see if what we got as far as candlestick structure in these zones, or maybe even closer. Looks like on the squeeze histogram, daily squeeze, we were in a mid and low compression squeeze and we fired 3 days. You got an imbalance right here at 33.45. This is the immediate resistance, shorter time frame. Your immediate support, shorter time frame here on HIMS, and they've already reported earnings, so that's out of the way. Yeah, they reported earnings on the 10th. Oh, yes, yesterday? What? Okay, that's not much of a move. Huh. All right. Well, shorter time frame demand is here, and shorter time frame supply is here. The moral of this story for HIMS is we're trading in a pretty tight range. So I want to be a buyer here and a seller here on HIMS. Okay, so whether you're looking to go long or short, if you're looking for a trade for a couple of days, couple of weeks, this would be the zones I would use. And if I was looking for longer duration, you can still use this zone, but I would only use half my allocation on the trade and save some allocation for a deeper pullback. And then I would trade it to these levels to the upside. First target, second, and ultimate right up here. Okay. All right. Thank you for the request, Mike. 38.2 fib level can be a part of a chop zone. So any fib level can be a part of a chop zone, TLC. In my experience, especially in day trading, when we are in choppy conditions, prices often trade between the 50 and the 618 of both ranges, measuring the low to high, and look for the 50 and the 618 to be support, and high to low, look for the 50 and the 618 to be resistance. I'll show you, because this morning we were very choppy. We had a moment or about an hour of chop on SPX, and I'll show you what I'm talking about. You see it right in here. This was pretty choppy price action there. So what I want to show you is this. what I would do when price is choppy, I like this, is what I like to do is have Fibonacci's ran from high to low, right? And low to high. So I'm only keeping the Fibonacci levels there. And then on the opposite direction, and the closer these levels are together, guess what? The more intense the chop is. Okay, it's going to look like that. So, with that being said, look at how extremely stuck price was between right around 77.55 to 60. Drawing these Fibonacci's, that makes perfect sense. Absolute perfect sense to me because the 60 is the 618 of this morning's down move. And we just couldn't get going up and above there. This is what we call the imposter level, and it kept price down all all morning. And we chopped between this range for quite some time. Okay. Now, once you identify that the market is chopping, and you just draw you a box around that chop. You can draw these Fibonacci's on and do what I just did. But what I want you to do is find that box. And then, regardless of the Fibonacci level TLC of 38.2, I want you to identify that chop zone. And then I want you to ask yourself, do I want to trade chop today or do I want to sit on my hands? And if the answer is you want to trade the chop, then my suggestion is to be a buyer at the lower end of this chop and be a seller at the upper end of this chop. Then, if your answer is no, I want to set on my hands until something either bulls or bears prove themselves, then you sit on your hands until you get the break of one side of the chop or the other. In this case today, we got the break of the downside of the chop. So once price broke down below this side, I want you to look at what price action did. Right? You see it? Boom. Okay. So that's how I treat chop. First, I run fibs in both directions. I look at candlestick structure and those Fibonacci levels. I don't draw this gray box around it, but if I was brand new to trade and chop, I would. All right. And then I pick a level that I'm going to call the bottom of chop. You can use a moving average on my chart. This is a 15-minute 8 EMA. And you can use that as, the place where buyers were stepping up. If you're okay with the risk of about 2 points, trade that end of chop. Give yourself 2 points of risk right there. Right. And then as far as the upper end of chop, you would do the same thing. Find your risk tolerance, a couple of points, mark it out, and just trade back and forth here or sit on your hands till one side or the other breaks. Okay. GC Ant, I believe that's the next one. You got it. Finally, gold started moving. I'm a little ticked at gold. It came within like way too close to my buy zone for long term trade, equity trade, and turned around before it got to my buy zone. So gold kind of has me ticked off, but look at it. This was my buy. You see it? And this was, I mean, decided in December. But there it is. Yikes. So close. Anyway, enough of that. I didn't get it. Whatever. Let's look at supply and demand here on gold. Buyer in demand, 4069, 3901. Price has moved back up over the upper yearly edge here. And we are on our way, I believe, on the weekly chart above the EMA cloud, 4575, and then to supply at 4690 to 4917, and further up 5186, 5626. From a daily time frame perspective, look, I haven't touched these charts and this is crazy. Wow. Pretty cool though. This was your demand zone and look how price basically just based right here and then we started moving up, right? And look at this. This is today. Daily 200 lined up with supply and you created some selling pressure for sure. Now, as far as buy the dip area, if you're looking for a shorter term type of trade, I would use that first imbalance candle up there at about 4,300. We created an imbalance move. You get a pullback to that area, and I would target 4,500 again, where we have supply. If you're looking for a deeper pullback or price to come down to the daily 50 or daily 21, which are almost together here, that's going to be somewhere in this area, 4187 to 4053. That is also a buy zone. Now, as far as the squeeze, it has fired 4 days and we've seen price come up to supply. On a 4 hour chart, we blew through those supply zones. So I'm just going to use this daily because it looks like the zones are going to be the same for me. Yeah. Yep, and yep. Yep. Nothing really changes. Intraday, I would play 4389. Okay. I would play this as a zone for day trading. A pullback here, whether that happens today or tomorrow. This would be my day trading buy zone. Uh, uh, Closer in time, swing trade, like say into next Friday, I would use this as my zone. But if you're looking for that longer, being in the trade for a month or so, I would look at a pullback here. Okay. All right. That is GC. Now let me see what we got next. You're welcome, Aunt. My pleasure. Um, uh, AMD. You bet, Henry. It's been a while since I looked at AMD too. So let's see. Now remember, AMD is going to move in sympathy more than likely with NVIDIA that still has earnings. Although AMD has reported earnings, NVIDIA has not. And I believe Broadcom still needs to report. So all of that is something to keep in mind. We did create a weekly supply right here, but honestly, AMD is had a heck of a bullish run and we're consolidating that move um, by chopping. Okay, the bullish run that I'm talking about is right here from March 30th up to these highs. Run you some fibs there, guys, and you've pulled back into the bull channel. Oh, golly, I like that zone because it also is the 50 and 618. I like that zone. Scale in this zone for a longer duration trade if that's what you're looking for. And then I would take some profits at about 492, 528, and 584. As far as the daily goes, ooh, I see we're in a squeeze. Okay, this is interesting with the update on the squeeze indicator. I want you to note that the most recent ideal squeezes have been to the downside. Keep that in mind when you're considering a trade on AMD. This is demand, and it is where buyers have stepped in, and we are right back there yet again. But with that being said, those are 4-hour candles. Let me look at the daily. I forgot I swapped time frames there. All right, you're below the daily 21, you're below the daily 50. Price is setting at demand. Those key moving averages would be resistance, and so they're targets. Back to the upside there. From a risk to reward perspective, if I'm trading this demand zone and I trade it from 467 to 426, that is 41 points of risk, and my reward is only 30. For that reason, I don't like the risk to reward trading it from the top of this demand zone. So, all that to say, I either wait for a deeper pullback before going long, which will reduce my risk, but it would also reduce my reward. So if I just look here, let's say I say, all right, I want to go long, but I'm going to go long in this tested demand zone towards the bottom, and I use 440 as my entry. All right. Then I have a risk of 14 and a reward of 27. That's a better risk to reward. Now, if this zone was fresh, I wouldn't be suggesting, or I wouldn't be thinking of a possible deeper pullback here on AMD. But because the zone isn't fresh and because the most recent ideal squeeze is to the downside, I'm going to be more patient on a name. Okay. And so for that reason, I would set an alert and look to be a buyer of AMD towards the bottom of demand here at about 440 or so, and then trim on the way up. And if price makes it all the way to my supply, I'm great. I'm golden, good to go. I would let a runner run, but I'm going to protect my profits at these smaller targets. All right. All right, guys, good stuff. I've got just a couple of minutes until the end of my session. Oh, Intel. All right. Melanie, I saw you ask about that, and so I'm sorry that I skipped it. Totally not on purpose. Let's look at Intel. The reason why you won't see a PMZ, Melanie, on Intel on a 3-minute chart is because you won't see a PMZ on any name on a 3-minute chart. PMZs will print on 5-minute charts. Okay? 5-minute charts. So, with that being said, here's the PMZ today on Intel. And this morning, it was very choppy inside the PMZ. You got the move up, you hit a target, you hit a target. Then we pulled back here recently on Intel. PMZ again being a buy zone because price is above it, the pullback, and you're at first target for me because of the falling 15-minute 8 EMA. Okay. But your PMZ only shows up on, or it shows up on higher time frames, not lower. But the 5-minute chart is the one that we use the PMZ values from. Okay. And as far as buy zones for Intel, Intel actually came down into my buy zone and I was waiting for confirmation. on Intel here. So I like to wait for higher lows. If you, well, of course, you don't have the indicator because we haven't sold it yet. But the 30-minute candles in a 4 hour zone is where I'm looking for higher lows, looking for that confirmation to go long. And then I figure my risk to reward. If I like the trade, I take the trade. If I'm planning on being in the trade for longer and it's from a daily zone rather than a 4 hour zone, then I look at that daily chart. You see how price is stuck right here on the daily 21. I would be looking in that case for a confirmation on 1 or 2 hour candles. So looking for that price to confirm for me that we are indeed breaking above and the knife has stopped falling. Okay. All right, guys, that's my time. I'm not sure who's in the MTT room now, but head over to the Mastering the Trade room and yeah, I always enjoy our time together. It looks like Taylor's in there now, so I'm sure Taylor have a lot of good trade ideas here. But thanks for being a part. Thanks for being active, and I look forward to seeing you on Friday in the MTT room, or if you're a member in the Trendy room and SPX room, I'll see you every day this week. Much love, fam.